Georgia Barkell, welcome back to the Vaxa Bureau Intelligence Optimized podcast. How are you?
I am wonderful. Thank you, Todd, for having me. It's great to be back on your podcast, and I'm super excited to talk about everything today.
Look, it's always a pleasure having you. Your insights into all things finance, economics around the Indo-Pacific are enlightening. I think the episode we did last year was the highest rating that we had.
Oh, man, I love that. You didn't tell me that.
So, Georgia, you have just returned from Harvard University in the United States of America, where you received a scholarship. Well done.
Thank you so much.
Tell me all about it.
Okay, so let me just break it down because that sounds like just the most incredible person in the world. Basically, I won a scholarship from the Harvard Club of Australia to go and attend one of the executive education courses at the Harvard Business School. These executive education courses are available to anyone. They range in time frame from like 4 or 5 days up to a couple of years, and they cover all sorts of topics. And the course I attended was the Foundations of Venture Capital and Private Equity. And being the managing partner at Sprint Ventures, a venture capital fund in Australia, it was a really fantastic opportunity for me to go and attend this course, to make connections globally, to learn from some of the best professors in this space, and to really bring together a framework around all of the knowledge I had in the private markets.
Wow. And how long did you go for?
So the course was a week, and it was on campus. So you stay at Harvard Business School. It's very intense. It's from 8 a.m. to about 8 p.m. every night. You're in learning groups, and there's a significant amount of pre-reading before you do the course. So I was doing a lot of reading for a good couple of months before I went over, because Harvard uses this case study methodology approach to learning, whereby they don't do lectures and they don't sort of, force feed you theoretical knowledge. The professors themselves teach the cases that they have researched and published. And they are cases on real world companies with real world problems. And the format of the lecture is to actually discuss and debate and workshop through these real life cases. And so the really interesting thing is that at the end of the day, there really is no right answer to any of these situations. And it's really interesting to see how people consider options and highlight objectives and all of the things that were discussed and all of the different perspectives in the room. It was a really incredible way to learn on this topic.
Wow. And tell me, did you have any venture capitalists in the session?
Yeah, surprisingly, there weren't as many as I thought. So there were approximately 70 people in my cohort. There were, I would say, about 10 to 15 people in the investment space. There were quite a few people looking to move into venture capital or were dabbling in the kind of syndicated space and were really trying to learn and upskill, which was awesome. And then a number of investors sort of around the fringes or in a sort of institutionalized capacity within banks and that sort of thing. And there were a lot of founders also trying to inform themselves on this process, whether it's raising capital or exiting to PE. And just a number of people just really interested in the space, and it was a really big mix. It was a great mix of diverse perspectives and backgrounds, and about half the people were from the States, all over the US, and then half the people were global. So lots from Europe, Middle East, a couple of us from APAC, a couple of people from India. And it was really interesting to understand their perspectives on the ecosystems with where they're from as well.
Wow. So you would have met some cool cats?
Very cool cats, indeed. Yeah, some really incredible founders doing amazing things. It was brilliant. And what I loved about the course is, while I work in venture capital, it really covered the whole private market. So it talked about venture, it talked about private equity, but it also talked about private credit and venture debt and things like crowdfunding. And it also deep dived on a couple of emerging ecosystems in this space as well. So we know the US is a very established investment market in the private early stage space, but like Australia, which has really only been very active for the last sort of 10 plus years, there are other ecosystems around the world that are trying to build their startup community. And we did a deep dive on Budapest in Hungary, which was really interesting, and their kind of strategies and tactics, and also on Dubai and how they have built a city in the desert that's created a number of industries, one of which is sort of the tech space. Yeah, lots of really interesting aspects to the course, and it was a great way to pull all of my knowledge together in a framework across the private markets. Absolutely, and learn from a mature market, and some ideas from these emerging markets, and really reflect on what we're doing in Australia and how it's working, and even how I think the markets are evolving over the next 5 to 10 years as well.
It's funny you say that because obviously, the last few months, all we're hearing is negativity in the market, and to counter that, we need some positive news. We're hearing that regional growth's slowing, especially given the trade tensions across the region. China, they're really intensifying their economic diplomacy with other countries around the world as well, given the new trade tariffs that are in place. There's some other challenges, I guess, in dealing with China, given their military footprint, and how they're reclaiming land and other bits and pieces. Indonesia, especially, they're facing some economic headwinds too. They're forecast to lose around 5% of their trade. There are a lot of monetary policy adjustments across Asia, and everyone's shifting strategically given the global trade routes. So these are all fairly negative, but there's got to be some positives in there, surely, George. Let's raise the sail and lift the anchor. Where's the positivity at the moment, especially across the Indo-Pacific?
That's a really good point. It is a lot of doom and gloom in the press at the moment, but we all know, and it's really hard to remember this when the rhetoric is so negative. But when there are circumstances like this globally in the financial markets or amongst international trade, there are opportunities, and turmoil and uncertainty actually bring opportunities. So we need to stay courageous when the market and there is political uncertainty when this is occurring, because there's actually, if you are well positioned and you can cut through the bad noise and focus in on where the opportunities are, you can actually, this is such a great time to be involved, and particularly in the venture capital space, for instance, or investing in general. When the economy is down, asset prices are down. So it's an excellent time to buy assets. So if you have capital and you have courage, and you can see the sort of thematics of where, the world is heading, it's really an incredible opportunity. And I know Sprint has been looking into this, as are a number of specific venture capital funds. And I mean, it's a huge topic, talking about defense technology or even dual use technology, and advanced manufacturing as well, where we are shoring up and stabilizing our national resilience around these kind of times. And if you are plugged into that industry and you have the opportunity to participate in that, this is an exceptional time to be involved in that space. So I think it's very easy to be scared, and it's very easy to be depressed, but we just have to remain courageous. And one of the great things about being in venture capital is that you have to have a contrarian mindset. So that means that when the market is going one way, we need to go the other way, and that's where the opportunities are. So for us, it's frustrating. There are definitely some blockages in the market, but it's also so exciting as well. So I think as long as we stay courageous and we look for those opportunities, then it will be very exciting times.
Yeah, it's interesting. You mentioned a few critical industries there, George. Yeah, defence is one of them, especially national security for this particular region. And you mentioned advanced manufacturing. So the Australian government and multiple state governments have obviously got a lot of accelerators, and they're throwing a lot of money towards advanced manufacturing. The challenge, though, some of the challenges we face in Australia And I guess it is due to taking the title of Tim Marshall's books, The Prisoner of Geography. We're an island nation at the bottom of the world. We've got fragmented ecosystem and lack of scale. We've got skilled workforce shortages. We've got limited commercialisation of research, high input and energy costs, and inconsistent government policy and support. How do we harness advanced manufacturing? Noting the word advanced, with organisations like the Advanced Robotic Manufacturing Hub here in Queensland, how do we take advantage of or how do we really put the word advanced on steroids in this particular country and, reignite Australia as not that we're ever a manufacturing powerhouse, but, how do we turn that into a critical industry here in Australia and make money out of it?
Well, I think there's a number of examples of it happening at the moment. We've got, Gilmore Space based in Queensland building rocket ships, and we've got, a big industry in robotics. We do a lot in medical devices, med tech. I do think that we in Australia need to focus on what our strengths are. And in terms of the advanced manufacturing, that's not going to be everything. That's not going to be like, automobiles or anything like that. So I don't think we should even look there. We should just focus in on the strengths that we have and really double down on those. And there are vehicles that the government has put in place to support this, like the National Reconstruction Fund and things like that. I haven't seen a lot around the deployment strategy for that. We've seen some investments. So I hope that it ends up in the right place. But this might be the impetus for Australia to really move forward on a lot of these barriers that you talked about, like the commercialisation of research and so on. We have exceptional universities, great research, but a lot of it is not getting out into the real world. So this might be the push that we need. Interestingly, I was at a conference last week and heard Jeremy from PsyQuantum, the CEO of PsyQuantum, talk about the incredible talent of quantum engineers and scientists in Queensland, which is something, but something I didn't know about, because one of the questions that people often say to him is why Australia, why Queensland? I mean, he had been based in the US for a very long time, and his answer to that was, why not Australia? They've got some of the best quantum talent in the world. So I think we really just need to hone in on the areas that we are exceptional in and double down on those. And I think this, it's a bit of a shame over the last couple of decades, this globalization movement where we have shared the production and manufacturing and development of different technology across the world as to where the best places for that to occur. So like you said, Australia is not going to be, at the forefront of some types of manufacturing, and that's okay because it can be done better and it can be done cheaper in other countries. And I think we should still continue to follow that deer. I think the US focus on trying to bring everything onshore is quite frankly incredibly inefficient and costly. But what we need to focus on is, those real opportunity areas for Australia. So I think there's a lot we can do.
Yeah, right.
We probably do need a bit more collective effort.
Yeah.
And maybe this will push us towards that.
Yeah, let's hope so. Because traditionally, we've been good at digging stuff out of the ground and selling it offshore, and we've been good at growing things, to a certain scale, feeding ourselves to a small extent. People say we're the food bowl of Asia. I think we're more like a corner store, to be honest with you. We just don't have the capacity and the capability. Plus, we've got people leaving the farming sector in droves, but they're critically important to our nation's future. But as is, like you said, technology, health, playing the aged care sector a bit as well, or quite a lot. I guess as an investor, where would you've spoken about a few opportunities there, but where would you be if you're an Australian investor looking to invest in the region, or someone in one of the 46 Indo-Pacific countries? Where would you be investing if it was your money?
Yeah, I think if I just divert away from the industry specific question at the moment and talk more a little bit about the thematics of technology, I think what we saw in the last 10 years was this real focus on SaaS, software as a service. It's easy to scale and grow quickly. That I think is completely 100% dead. everyone's focusing on AI, but I think the problem with AI is it's so capital intensive to build a really global tool that, and I flip-flopped on this for a couple of years, but I really believe that the incumbents are going to win the AI race. And there are great startups out there, well, they're not startups anymore, like Hugging Face and things like that, do have a real presence and potentially will be rolled up and aggregated into incumbent technology like, Google and OpenAI and Meta and things like that. But I think that AI, the pace of development means that whatever is built today is obsolete, next month. And so I think the AI space is one to be really cautious around. And so what that leads me towards is these kind of deep tech or tough tech areas where you have a significant amount of research, you have patents, you potentially have hardware or devices or things like that that provide that lead time in getting a product to market can be years and years, like 6, 7, 8 years. You need time and you need a lot of capital, but you have an incredibly defensible product. I actually think that area is going to be where the biggest returns are. And that, if we think about it, leads itself into that advanced manufacturing space. But if we then focus on industries, look, I think we have a lot in the construction, property, mining tech space. We've got a lot of specialty around that. We also, because we're an island nation, we have, natural wonders of the world. We have the ability to capture a lot of renewable energy, and there is a big focus. And I know in Queensland, where we are, and particularly North Queensland, there is a huge focus on sustainability, circular economy, climate tech. I think that is a real opportunity for Australia to distinguish themselves from other countries. So I think there's a lot of really interesting areas that Australia leads in that maybe is not well sort of known or talked about globally.
Yeah, rough. And I guess, from an Australian point of view too, if you're investing in Australia in the region, it looks like there's all talk at the moment that the Reserve Bank's going to drop interest rates a further 2 times this year. How would that positively impact investors here?
Yeah, well, we know that when the interest rates are high, people tend to leave money in cash. It's obviously 100% liquid. It's very stable. It's very safe, particularly with all this uncertainty. And when cash rates are high, people can get fairly good returns with absolutely no risk whatsoever. So when the interest rate comes down, it's not as attractive to hold money in cash anymore. And investors start looking at other asset classes to get better returns. So from my perspective in venture capital, it would be great when the cash rate comes down because more investors will look to other assets like venture capital, particularly as we target alpha returns in a diverse portfolio, and hopefully allocate some more capital to this asset because the market has been very risk averse and very cautious, at least the last couple of years and potentially further. So cash rates coming down is great. You could borrow more when the cash rate is lower as well, so you can leverage and things like that. So I think it will be a good thing. I don't know about two more cuts this year. We shall see. Maybe one. That's my prediction. I don't think the RBA should be too rash in adjusting the cash rate because it is actually at a very reasonable level. So everyone can only remember as far back as COVID when it was at 0%, but that is actually a complete anomaly. And the cash rate, sitting somewhere around 4% is actually very normal. So we'll see. We'll see what happens with that. But it's a good thing. It stimulates investment when the cash rate goes down.
And Georgia, within our immediate neighbours, so Pacific Islands specifically, there's economic growth that's predicted to pick up a little bit. So the Asian Development Bank's forecasting about a 4% expansion, and they're funnily enough talking about things like mining, construction, tourism, particularly in countries like Papua New Guinea. Now, Papua New Guinea's always been a bit of a a tough place to work and invest. We've worked up there for over 20 years. It's very exciting. I absolutely love it. The people are wonderful. There's a lot of opportunity, but it's often very difficult to get your money out of the country. Tell me, if you were looking into the South Pacific and countries, countries like Papua New Guinea and other countries like that, is there any advice that you give to potential investors?
I think the biggest thing is when you're investing in other geographies is to really understand how easy it is in those geographies to do business. And PNG may not be a great example of this, but you need to, if you're doing a startup or you're doing, you're setting up a new business, it needs to be easy to do business. You need to be able to spin up an entity quickly. You need to be able to operate offshore in other geographies. You need to be able to be taxed fairly or be able to repatriate profits potentially. Things like that are really important. So when you're looking at other geographies, if it is hard to do business, I would just be a little cautious.
Yeah, that's a good word of warning. Good word of warning, without a doubt.
But as you said, tons of opportunity. So depends on what you're trying to achieve as well.
Yeah, that's true. Very true indeed. So, Georgia, you've been involved in a number of aspects and layers of finance and economics in your career. You've obviously, for the last number of years, the managing partner of Sprint Venture Capital. How are you seeing the venture capital industry evolve?
This is a really interesting one, Todd. And I think that Australia as a VC industry is still pretty young. And by that, I mean, we haven't had a significant amount of exits of large scale companies like unicorns, for instance, where a startup is scaled up to be a value of $1 billion or more. We haven't had a large number of exits in that space. And what that does is it returns capital to the industry. It shows that there is amazing outcomes in this space. It also returns talent to the industry as well, so that you will have people going back in and starting other great companies as well. So we're coming up to that part of maturity in venture capital in Australia, but we're still not. It's that flywheel effect still hasn't really kicked in yet. So it's really interesting to look at the way Australia considers venture capital, and then the way that other markets have evolved internationally as well, with the US being an example. So I think that the Australian venture capital industry still has a fairly early view of what it means. And by that, I mean VCs tend to invest quite early in a company, and they remain as a shareholder in that company right up until a point when that company is sold or it IPOs or whatever happens. And that worked really well as a model like in the early 2000s. Interestingly, in the States, a lot of companies IPO'd after about 4 or 5 years because that was the best way to access capital. But what they're seeing globally is that there is so much private capital now. There actually is no reason for a private company to do an exit some sort, to list or whatever it is, in order to get returns as shareholders. So you can just keep raising capital privately. And a great example of this is OpenAI, which is valued at $157 billion.
Is that with a B?
Did it? Yeah. Yep, 157 billion raised capital in October 2024, so only 7 months ago, and they raised $6.6 billion from the private market. Now, if this was 10 years ago, they would have listed. They would have listed because that's the easiest way.
That's what you did. Yeah.
That's what you did. And there's just no reason for companies to do that anymore. In addition to the fact that listing is actually a massive pain, the governance and the everything that you need to put in place in order to list is really it really slows down a company. So there's so much private capital in the market now for startups. And the problem as an investor shareholder is that you actually need to get a return. So as a venture capital fund, I raise capital off my investors into a fund, and then from that fund, I invest into a number of companies. So ultimately, I need to get returns back to my investors. And if a company has no motive to provide that opportunity to, get a return or to exit or to cash out of a position, it's very, very hard then for me to meet the objectives of my investors, which is to get returns. And what we're seeing is typically in the past, like 10 to 20 years ago, life cycle of a fund, of a venture capital fund, was somewhere around the 10-year mark if you were investing pre-seed seed. That is now pushing out well beyond 10 years. And if you think about it, even if you get exact same returns, but instead of taking 10 years, it takes you 13 or 14 years, your average annual return over those 13 or 14 years becomes much, much less.
Mm.
And so as an asset to invest in, it's not as attractive. And as venture capitalists, we need to evolve this industry so that there is a way to exit our positions, to get returns sooner. And I think there's a number of different things we can do here. I think we could segment the business life cycle and invest in stages of the life cycle. And actually, as a small kind of Australian venture capital fund, if you invest in pre-seed seed and your portfolio company is growing and expanding to the US and potentially raising capital in the US, you as a small venture capital fund can offer less and less assistance over time. And in actual fact, releasing your equity out of the business through a secondary market transaction or selling it to a new incoming investor is actually a really positive way to stimulate the cap table on a growing startup. But it's also a really great way for a venture capital fund to make a return and exit a position before it starts dragging into, that 13, 14, 15-year time period. So that's one way. I think we need the secondary market needs to develop a lot more. So what I mean by that is in the private markets, it's not like the ASX where a company's shares are available for anyone to buy and sell at any point while the markets are open Monday to Friday. Private markets, deal by deal, and you need to find a buyer and you need to find a seller and match them. And there's no systemized process to that. So I know there are a couple of operators in this space trying to build a sort of secondary market platform where privately held equity holdings can be sort of listed so that you can find those buyers and sellers easier. But this is a whole space that needs to be developed so that it can provide liquidity to the market. So I think there's a number of things, and I don't have the solutions, and it's going to be an industry-wide initiative. But I think there's a lot of really interesting ways this venture capital space can go in Australia. But we do need to evolve. Otherwise, I think we're going to get caught in a trap where we think the market is still operating the way it was 10 years ago, and it just isn't anymore.
No, it's tough, and especially given the size of the market here, I'm just astounded at some of the valuations of companies pre-money, not just here, but over in the US as well. And you look at them and go, how are they going to make a return? How are they going to get money back? Yeah, for their investors. And that's changing, more and more as well. But yeah, that's some wonderful insights, George. Thanks for that.
Thank you. Thanks, Todd.
Hey, Georgia Barkell, a big, big thank you for joining us today. Your insights are always so insightful. Yeah, we really appreciate your time and look forward to continuing to follow you with what you're doing at Sprint and elsewhere in the market. And yeah, I'm sure that you'll be the Dean of Harvard in no time too.
We can only hope. Thank you, Todd, for having me. It's always a pleasure being on the Vaxxer Bureau podcast, and I really appreciate the opportunity.